You're on mute.
Unmute. Good afternoon, everyone, and happy Friday. It's Alyssa Corum here with Ed Carson, capping off another week of trade. Thanks for joining us. We've got a couple of top stocks that we're going to be taking a look at today. PayPal and Shopify working on handles, and we're going to go through the NASDAQ, starting off with a daily candlestick chart. Ed, not a really great way to finish off the week after such a strong start.
Yeah, I had a nice little candlestick to start. It was really a strong gain on Monday, and then we pulled back the rest of the week, and it was really sort of an ugly close today. There was a lot of options expiring, but the market came down quite a bit, especially on the NASDAQ, some big caps. But still, the NASDAQ, I think all the major indexes closed higher for the week. And one of the advantages here is that you've got now maybe the beginning of a handle forming, and that kind of be situating. A lot of stocks are forming handles right now. And so this is a great week in that regard. It could be potentially setting up a great thing. The question is now, can the NASDAQ and the major indexes and these leading stocks break out from here? It doesn't have to be right away, but over the next several days or a couple of weeks, can they break out and really move higher from here?
Yeah, that's right. I mean, last week was a really great week, and Monday started off strong. So while, it may not feel all too great seeing this bit of a pullback, it's very constructive to see the major indexes pausing a little bit here to digest some of those gains. We're back almost, or, we did touch the middle of that channel line. So I think having the handle here, as we've said this week, is good instead of just running straight back up.
Yeah, we were already starting. We weren't getting extended, but if we had run straight up, we were getting pretty close to all-time highs. Then the 50-day line, it would have started getting a little extended there. I mean, when we talk about stocks that run straight from the bottom, there's just a high risk of a pullback. And so we would have seen all these stocks like Apple and Amazon hitting new highs, and it would have been a buy point. But then you would have been like, well, do you feel comfortable buying it, knowing that something like this can happen? So definitely a positive thing. On a weekly, it doesn't necessarily look that great because we ended in the sort of the lower half of the range here.
Yeah.
But
So what does the weekly chart tell you? A little bit something different than the daily chart tells you. I mean, how we closed Friday seems to have had an impact, even though the Nasdaq did finish down just about 0.4% for the day. As you mentioned, still up for the week, but closing in the lower half of the range, it looks like.
as you can see, we've had that before. We had it happen here when we were hitting short-term resistance, and we rose but closed well off the highs of the week, sort of finished near the lows, and then we just turned around and powered higher. So it leaves a bad taste in your mouth, but it's sort of like, yeah, if it's like the last bite before you go to bed, it's like, that was sort of yucky. But even if you had a really great feast, that's that situation. But I think it's just setting up is that there's obviously with the market and leading stocks, how that goes going forward over the next couple weeks. And there's just so many headlines out there that could move the market up or down or both. So we'll just have to see how that goes.
Exactly. And we do also want to flip on over to the S&P 500 on MarketSmith. The S&P closing roughly flat today, while the Dow closed up about 0.4%. So looking a little bit better, but here too, that handle type action is very evident.
Yeah. And so that's just something we're looking at. And like, whenever you think, oh, my stocks are going to do this or that, and yes, some stocks did very well today and some stocks did terrible, but most stocks are going to follow the market. And the market looks like a cup with soon to be a handle base, which is not a bad thing, really. So
Exactly. Yeah. Some of the most powerful runs were sparked by cup with handle bases. I think Apple back in 2004 was it? That was out of a cup with handle, I believe. So it's a very powerful pattern, but you of course need the markets to cooperate for for the breakouts to be as fruitful as they can be. And we'll have to see where the market takes us early next week. But let's take a look at a couple of top stocks that are mirroring the action that we're seeing in the major indexes right now. The first of which is Shopify, which did reverse lower today about 1%, but volume was a little lighter than average. And volume actually, Ed, has been drying up, which is something that is really nice to see when you're seeing that handle form.
Yeah, that is. I mean, it's like that's really sort of amazing how light that volume is. But here we are. We have a situation where we actually have a handle that is formed, whereas what didn't happen on some of these other indexes. But we have 1, 2, 3, 4, 5. A handle has to be at least 5 days on a daily chart, and on a weekly chart, if you have one down week. And so we have it here. It's not showing up yet. That basically on MarketSmith, it shows up a couple hours after the close, it'll reset. But this is a cup with handle base now. This is the idea. The whole point of a handle is that you're shaking out weak holders. Like people are going, I got to here. It's starting to come down. I want to get out. But this light volume suggests no heavy hitters are selling. It's just people saying, I'm just going to dump a few shares. I'm going to get out. So if it does break out, it can be a catalyst because everybody who's in it is happy.
That's right. We do have earnings at the end of the month. That's also something to keep in mind here. And I do want to mention that on IBD Live this morning, our own Arusha Pires walked us through how he's treating this. Of course, we're talking about a cup with handle here, a very traditional pattern that we like to talk about. But there are some earlier or aggressive entries that could be found as well, with Arusha acting with it, retaking that 50-day line. So we talked about that in detail this morning. And we also touched on PayPal, which is a day or two shy, I believe, of a proper handle, but it is definitely shaping up there, and could be that nice little last shakeout that we need, Ed, before the stock powers higher. But we'll have to see.
Yeah, it would take a couple more days, and because it needs 5 days, and this is it's the first down day, or after that. So 1, 2, 3. It basically had a handle here, as you were pointing out on IBD Live this morning. But the base wasn't really formed yet. It was too short, but that did provide some kind of short-term resistance. So it did get above that, and it's held above that, at least closing above that. So that's a positive.
Yeah, that nice round number of 200. We like it was a resistance level, now an area of support for the stock. This one too has earnings just a couple of days after Shopify. Actually, looks like it's anticipated to be the beginning of November, so just a couple of weeks away there. And this name too also boasts some strong fundamentals, especially the last quarter, a nice pickup on both the top and bottom lines. And it's had a really strong track record of growth for quite a while. Maybe some spotty numbers here and there, but I feel like overall, Ed, this one has been pretty reliable when it comes to that strong top and bottom line growth.
Yeah, and that's why it's a long-term leader, and you can see on a monthly chart, it has, strong fundamentals, as you're pointing out. It has a strong record, except for this one little dip here, and even then it wasn't that bad. It's just been a real strong winner since it's been public.
Yes, it has. So we definitely like keeping those on our radar. And we have the full portfolio of long-term leaders over at investors.com in our stock list section, I believe, as well as an in-depth article talking about the buy and sell rules that we like using for these, which are a little different than our standard position trades. And we also talk about this and more. Once again, gotta throw that out there on IBD Live. We just have so much fun, and it's really educational. And we talk about a lot of actionable stocks on that show, Ed.
Yeah, I mean, I'll be honest, I've learned so much over this past year just trying to learn about just like really understanding how all these great, traders here, and we brought in a bunch of portfolio managers from William O'Neill, and it's just how they operate. How do you buy? How do you build a position? How do you, looking at various things, because it's really, I think it's really next level. But it is a lot, it's entertaining, and it's just a great experience. And I think most of you and I are, even when we're not on the show, we're usually on the Q&A.
Yeah.
because we want to be paying attention to it.
Yes, it really is a great way to stay in step with the market and pay attention to the stocks that are making those moves. Because, for example, PayPal, that's been one, and Shopify, both of those we've been talking about for a long time. And Zoom really stands out as one that we were all over really from the start of the year. And so it's a lot of fun. We hope you join us, investors.com/IBD live. But before we go, Ed, so we've looked at the NASDAQ, we looked at the S&P 500, and we looked at a couple of top stocks. So what would you say to kind of put all that together? What should investors be doing over the weekend to prepare for the week ahead?
Obviously, you always want to be building your watch list, but I think in this situation, you've probably bought out some stocks in the last few weeks, and we've had a confirmed rally since September 30th. There's been a lot of breakouts, so hopefully you've built up some exposure. Right now probably is not a great time to be adding to it substantially. I'm not saying that you can't, if something breaks out, that you can't go in there, but right now it's probably a good time to stand still a little bit, just because the major indexes are sort of in this area where maybe we're going to do something. Just because it looks like it's forming a handle, it doesn't mean it breaks out, the major indexes or the leading stocks. So if those leading stocks and the major indexes power higher, whether it's next week or 2 weeks or after the election, that's great. Then there's another leg up. There'll be plenty of stocks to buy, and you have pretty confidence that it's going to keep going. But if we falter from here, we're going to have to start looking to pare back. So right now, I'd say, I probably, build your watch list, analyze your stocks, see if there's any ones you want to cut. But really, I think it's a little wait and see. Wait for that next big move up or down. We're at a turning point. Which one? I don't know.
Yeah, and you can be sure that we are staying on top of the market trend every step of the way. Investors.com with all of our great coverage, and we'll be keeping you up to date on how you should handle your portfolio with whatever the market throws at us. But the most important thing is to always remain flexible with our technical analysis of the market that we do. We can make some inferences based on what we know from history, but at the end of the day, it's all about reacting to what the market gives you, and IBD and our experts do a really great job at that. So we hope you enjoyed this expanded edition of Stock Market Today on Fridays with our additional technical analysis. And we'll see you right back here on Monday.